The sick leave and family leave tax credits for self-employed. These are two new tax credits that are specifically for your 2020 tax return. And if you are self-employed and independent contractor, sole proprietor, or receive any 1099 income, then I hope you feel special because this video is for you. What's up, guys? I'm K. Scholl. Welcome to another financial awareness video. Okay, so a couple things you're going to want to know right off the bat. I do my best to try and set the right expectations. So a couple things you're going to want to know first. The maximum amounts of $5,110 for the sick leave tax credit and the maximum amount of $10,000 for the family leave tax credit are both based on your average daily revenue. What is your average daily revenue? Well, go look at your 2019 Schedule C, which you should have pretty handy because I'm sure you're applying for PPP Round 2 either as a first draw applicant or as a second draw applicant. So you should have that handy. And take the number on line 31 and divide by 260, and that is your average daily revenue. If you show a loss on your 2019 Schedule C on line 31, then you're going to want to use your 2020 Schedule C line 31 to get your average daily revenue. Conversely, if you're showing a loss in 2020, then you're going to want to use your 2019 Schedule C on line 31 to arrive at your average daily revenue. And if you happen to be showing a loss in both your 2019 and 2020 Schedule C, well, then you might want to consult with a different CPA because my CPA has advised me not to show losses in consecutive years because he says that's a flag to get audited. And if that is you and you're showing losses in both years, then unfortunately, I'm sorry to be the bearer of bad news, but you won't be allowed to get either of these tax credits. And I strongly encourage you to find out which of these Schedule Cs you might use because you're going to want to use whichever has the higher number to maximize these credits. If you're wondering how much money you need to make in order to max out these credits, don't worry, I've already done the math for you. $511 multiplied by 260 is $132,860. So if your Schedule C line 31 is higher than this amount, then you're capped at $511 per day for up to the maximum of 10 sick days for the sick leave tax credit. If you show less than this on your Schedule C line 31, then simply do your own calculation to get your number. Keep in mind, you should know that $511 per day is based on you experiencing symptoms and you being the one that was sick. If you were the one caring for somebody else that was sick, then that maximum per day is $200 per day, up to the maximum of the 10 sick days for this sick leave tax credit. The family leave tax credit is based on a $200 average daily revenue. So we simply apply the same formula. $200 times 260 is $52,000. So if you are married and have kids like me, and you as the self-employed individual of your household were the one that had to stay home and keep an eye on your child or your kids because their daycare shut down or their school was shut down. I think for us where I live, I don't think my girls went back to school after spring break, after that holiday. So from that period on, I believe it starts April 1st, from that period on, they didn't go back to school. So if you have 50 days and you show on either your 2019 Schedule C or your 2020 Schedule C $52,000 or more, then you're good to go to get the maxed out limit of $10,000 for the family leave tax credit. Additionally, with the stimulus bill that was passed in December of 2020, they extended the allowable days for these tax credits from April 1st of 2020 through March 31st of 2021. So please keep that in mind as well. If you're a parent whose kid's school closed down, then I think that family leave tax credit will be pretty easy to get, just my opinion. But to qualify for the sick leave tax credit, you'll have to have at least one of these apply to you. Either your state, local, or federal government advised you to quarantine or you were advised by a healthcare professional to quarantine, or perhaps you were experiencing some symptoms and decided to self-quarantine on your own. Man, I think I'm feeling something coming on. I better self-quarantine. Listen, I know it's not a laughing matter. I would not advise you to abuse this tax credit, and I want to encourage you to follow the rule of the law. Okay, so now we're going to transition and go over the IRS website and a few forms so that you have a better understanding of what you need to do in order to claim these tax credits. To claim your 2020 tax credits for sick leave and family leave for certain self-employed individuals, you'll need Form 7202, and we'll put that on Schedule 3, which will then be shown on your 1040, line 20. I'll also leave links in the description so that you can read and research how to calculate these tax credits for yourself. However, you'll need to provide some additional documentation in order to get these tax credits. So just bear with me for a minute because I'm going to grab my computer and just read a few things off to you and provide some additional insight. So hang tight. Okay, so these are directly from the IRS websites. How should a self-employed employer substantiate eligibility for tax credits for qualified leave wage equivalents? Substantiate eligibility is a fancy terminology that just simply means prove it to me. Self-employed individuals should maintain documentation establishing their eligibility for the credits as a self-employed individual. The documentation should be similar to the documentation that employers claiming the credits for qualified leave wages under FFCRA sections, blah, 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 blah. Okay, so what this means is even though you're self-employed, you should basically do very similar actions as what other employers have to do as well. Okay, so you click that link right there, the one that says, how should an employer substantiate eligibility? You click that link and it takes you right here. What information should an eligible employer receive from an employee and maintain to substantiate eligibility for the sick leave or family leave credits? An eligible employer will substantiate eligibility for the sick leave or family leave credits if the employer receives written request for such leave from the employee in which the employee provides, number one, the employee's name, again, that's you. Number two, the date or dates for which leave is requested. Remember, you could only claim up to 10 days. And if this was you and you were caring for yourself and you were the one that had symptoms or you were the one that was self-quarantining, that's the $511 per day for up to 10 days. But if you were the one caring for somebody else, that maximum is $200 per day for that same 10-day period. So there's only a 10-day date of windows that you're going to put right here. Number three, a statement of the related reason the employee is requesting leave and written support for such reason. And number four, a statement that the employee, which is you because you're self-employed, is unable to work, including by means of telework for such reason. So if you're doing this on your own, then basically this is essentially a letter and a written statement by you who is self-employed. And if you're working with a CPA, they might have a little bit more of a formal approach of how to structure and put this together. Okay, moving on. In the case of a leave request based on a quarantine order or self-quarantine advice, the statement from the employee should include the name of the government entity ordering quarantine or the name of the healthcare professional advising self-quarantine. And if the person is subject to quarantine or advised to self-quarantine is not the employee, so if it's not you and you're the one caring for the other individual, then you'll need that person's name and the relation to you as the employee. Okay, now we're going to move on a little bit because this now is transitioning some of the language and verbiage to talk about the family leave tax credit. So here we go. In the case of a leave request based on a school closing or childcare provider unavailability, the statement from the employee, again, that's you because you're self-employed, should include the name and age of the child or children to be cared for, the name of the school or summer camp, summer enrichment program, or other summer program that has closed or place of care that is unavailable, and a representation that no other person will be providing care for the child during the period for which the employee is receiving family medical leave. And furthermore, here we go, with respect to the employee's inability to work or telework because of a need to provide care for a child older than 14 during daylight hours, a statement that special circumstances exist requiring the employee to provide care. Okay, so you don't just get these tax credits for no reason just because you're self-employed. You've got to substantiate your eligibility, which simply means that you have to prove it with some written statements, with some documentation, and that documentation is going to be sent in along with the rest of your tax return documents in order for you to prove and substantiate. Furthermore, a little bit further down this screen, there's another bullet point that said that you had to maintain these documents for 4 years. So stay organized and keep this documentation on hand on your computer or stored in your house for a while. Okay, so given all of that information, there is one last little twist from the IRS website that I want to bring to your attention, and that is this right here. Note that the CR Tax Relief Act of 2020, enacted December 27, 2020, amended and extended the tax credits and the availability of advance payments of the tax credits for paid sick and family leave under the FFCRA. These frequently asked questions do not reflect the changes made by the CR Tax Relief Act of 2020. However, please continue to check back on this page for any updates related to the change in law. So my plan is to simply make another dedicated video for you to watch and get some updates, or stay tuned to the channel because I might just simply make a new pinned comment or maybe update the description of this video. So stay tuned. If there isn't anything drastically different, then I probably won't make an entirely new dedicated video, but stay in touch because on my community tab, I might make a post there. So would love to invite you to subscribe to the channel if you haven't done so already. Hey, if your adjustable gross income married filing jointly is under $125,000, then check out this video right here about whether you should contribute to a Roth IRA or a traditional IRA. Or, I don't know, maybe you like that one instead. If you have any questions for me, let me know in the comments down below. I appreciate your time. See you in the next one.